Hi, my name is Danny Brown. I'm the CEO of Myriad Real Estate Group, and this is going to be our June market update. For the first time this year on a national level and in Phoenix, we are seeing inventory drop year over year, meaning that there are less homes on the market than the same time last year. At the same time, because interest rates have come up a little bit on the heels of the war in Iran, buyer demand is also falling. So we are seeing a drop in supply. At the same time, we're seeing a drop in demand. So what does that mean for housing? It means that not much has changed from last month to this month. Home values are still where they're at. Buyers still have a slight advantage over sellers and have negotiating power. The other big news is Kevin Warsh got sworn in as the new Fed chair, and a lot of people, from what I am seeing, are stating that now we're going to see mortgage rates come down, that he is going to want to cut rates. While yes, he does want to cut rates, but if you are listening to someone tell you that mortgage rates are going to come down because he's the new Fed chair, don't listen to that person. Fed chair is not a dictator and does not get to unilaterally make rules. And we're in a very high inflation environment right now where the cost of everything is a lot more expensive than it was just a couple of months ago. And so the Fed cannot cut rates going into that environment. So what we've seen is a shift in the market where instead of Fed rate cuts, we're actually predicting that we may get Fed rate hikes, making borrowing more expensive. Look, every time the 10-year gets above 4.5% interest, we see the administration come out and talk aggressively to get that to come back down. So the longer that the 10-year Treasury is at 4.5% or above, the higher the likelihood that I think that the altercation overseas is going to end. They do not want to see the 10-year be above 4.5%. I hope that we are closer to the end than the beginning of this thing because it is really starting to negatively impact a lot of different areas within the economy, especially the administration's desire to cut interest rates and make borrowing cheaper. Right now in the Phoenix market, we are headed into our triple digits, and what we typically see this time of year in our seasonality is a pullback in inventory. So we see less people selling their homes, but we also see less buyers in the marketplace as well. So a lot of people just leave Phoenix this time of year. Our winter visitors leave, kids are out of school, so people are taking vacations, and the months of June, July, and August tend to be slower months for real estate. Doesn't mean that nothing happens. We have buyers that are buying homes right now. They're getting good deals. So if you are a seller, you need to present a good product. First impressions are everything. You need to be priced accurately. And if I'm looking at the past to predict the future, I'm actually pricing below what my comps recently sold at, knowing that they had sold. Maybe they sold before the Iran war when the market was much stronger. So I would take that into consideration that if your neighbor down the street sold for a certain price, you probably need to price below where they sold. Also take into consideration if they had to give buyers concessions in order to get the deal done. And conversely, if you're a buyer, definitely be asking for those concessions, asking a seller to do repairs or give credits in lieu of repairs, and maybe being a little bit more aggressive in your offer strategy to the sellers that are on the market. So that is our June market update. If you have any questions, leave them below. Don't forget to give a like and subscribe, and I will see you next month.